What's going on, everyone? Welcome to episode 132 of the Money Peach podcast. Today, we're going to be talking all about credit scores, everything that you need to know about improving your credit score, some of the myths when it comes to the credit score, and just basically everything that kind of encompasses why credit is important and what you can do to improve your score. And to do that, I'm bringing on a credit expert. Now, before we jump into the credit scores, let me just say welcome to the show. If you're new to watching the Money Peach podcast or the Money Peach live show, we are found now. We're streaming this on Facebook Live, on YouTube. We're also going to be on IGTV, and then anywhere that you can search Money Peach in a podcast app, you can find us there. So all of this for you guys to just grab, find the information, however you want to view it, listen to it, or absorb it. Just want to say welcome. Thank you for being here. And before we jump into everything credit scores is the topic for today, let me ask you this. This is a serious question. Would you like to finally have a plan for every dollar in your life instead of wondering where it went at the end of the month? Would you like to have a budget or a plan how to save money or pay off debt? I just finished a 5-week coaching program where we meet on Zoom twice a week with about 40 people, and we went over those exact things. We had a 97% success rate based on two things. Were you able to save at least $500 in 5 weeks? And did you master a spending plan? The answer 97% of the time has been yes. And I want that for you. But to make sure that I'm a good fit for you, I'm going to be reopening the doors to the live coaching program where we meet on Zoom. And I'm going to have you apply for it because I want to make sure that I'm a good fit for you and you're a good fit for me. So if it's something that you're interested in and you definitely want to move in the right direction with your money, you want to save more money, you want to start moving in the direction of paying off debt and removing that financial stress for good, head over to moneypeach.com/apply. That's moneypeach.com/apply. Go ahead and fill out the application, and I will definitely be getting back to you. I'll be reviewing those applications myself, and I'll be in contact with you, and we'll go from there. So that's moneypeach.com/apply. Now, let's jump into today's episode. I'm really excited. I got my good friend. His name's Chris Huntley. He's coming on in just a minute here. He founded a site called Credit Knox, and he has become known in the industry that we're in, this little fintech world, as someone who knows everything there is to know that's important when it comes to improving your credit score. And there's a lot of, I would say a lot of cheese balls out there when it comes to credit scores. And I've heard a lot of them, but Chris is not one of them. Chris is a good friend of mine, and he's going to come on now here in a minute. And we're going to be talking everything credit score. So Chris, welcome to the Money Peach podcast. Glad to have you on. I think this is the first time you've ever come on the show. And I think we need to do this more often. So thanks for coming on.
Hey, Chris, really good to be here. Thanks a lot for having me.
So I have a lot. We just finished this class that I was doing, and I had somebody that at the end of the class we do one-on-one calls where if there's anything that's like personal that you want to go over just one-on-one. So we do that. And I was meeting with this girl, and she started asking me a lot of questions about credit scores. And some of the questions she was asking surprised me a little bit because the information that she had heard was not accurate at all, and I was kind of taken back. So we were having this conversation, and that's kind of when you came in my mind. But one of the things that she had said is, I was told that my credit score really isn't that important. And I was like, excuse me? What would you say to that?
Yeah, you're right. So we just wrap this up right now.
Yeah.
No, she's not right. Yeah, so it's very important. Your credit score matters for a lot of reasons. Probably the most important reason is for you to be able to get approved for simple loans, like just to get approved for a car loan or a personal loan. More importantly, or on a bigger stage, maybe an auto loan or a home loan. And if you have a really bad credit score, you might even have a problem you're renting a home or even getting a cell phone. So you want to watch your credit score and make sure you're doing everything you can to improve it.
Okay, so talking about the credit score here, what I was trying to explain to her, and tell me if I'm wrong on this, but your credit score affects basically the amount of money that you're going to pay. So I'm not a big fan of taking out debt. I'm always telling people pay off debt. But if you're going to go out and buy a $300,000 home, good luck trying to just save up and pay cash for that. Not many people these days are doing that. Okay. So the credit score affects how much you're going to pay in interest over the life of the loan. Is that correct?
Yeah, it's really funny that you are using this $300,000 home example because, and this was not coordinated by us, but before the call, I was just looking up some sample mortgage rates for a $250,000 loan. So let's say you've got a $50,000 a down payment on a 30-year fixed loan. Well, if you have a good enough credit score to, let's say, get a 3.5% interest rate right now on 250K, you're going to pay 11.23 per month. So you might want to jot that down. Now, if you're just maybe one tier lower than that, maybe you're 50 or 100 points less in your credit score to where you can only qualify for a 4.5% loan. So it's only 1% difference. Well, now your monthly mortgage is going to be $1,267. So it doesn't sound like a huge difference. It's $144 a month, but just in terms of cash flow, I mean, that could be a car payment for a lot of people. And over 30 years, it's over $50,000. And make no mistake, you're still just paying back the same amount, 250K, right? So that's all interest. It's over 50K in interest, just because of credit score and what you could, what you're able to get approved for interest.
Okay, so and that makes sense to me. So basically, and why do lenders, when they're looking at a credit score, basically from what my understanding is, and correct me if I'm wrong, Chris, is the credit score is basically letting the lender know the level of risk you are to them. So if you have a lower credit score, it's an increased risk to the lender, which means they're gonna make you pay more.
Yeah, I mean, exactly. I mean, in its simplest form, it's like we have a mutual friend, Deacon, right?
Mm-hmm.
And let's say, Chris, that Deacon came to you, a month ago, and he asked to borrow $100, and he said that he would pay it back a couple weeks later. So a couple weeks comes, and he still hasn't paid you. You're like, Deacon, call him up. Where's my money? And he's like, I'll get it to you in a couple weeks. And then he does this again, and then he does this again. Pretty soon, your estimation of his credit worthiness or his ability to repay you is gonna really decrease. So if you had to put a number on his ability to repay what he's borrowed, then you're going to penalize him.
Okay, so go ahead.
Yeah, so there's a lot of factors that can go into your actual credit score, but obviously repayments of your payment history, right, is going to be one of the critical ones.
Okay. Let's kind of transition into, how does the credit score work? What is the breakdown of the actual credit score?
Yeah. Okay. So it's broken down into 5 components. The 2 most important are your payment history and your credit utilization. And so those are ones that I like to focus on. So payment history is what we just talked about with Deacon. If he's paying you late all the time, right? So
Mm-hmm.
do you have 30-year lates? Do you have 30-day lates, 60-day lates? Have things gone to collections? Do you have a bankruptcy? And so that's your payment history. Now, utilization is basically how much of your possible credit that you have that you're using.
Okay.
So let's say that you have $10,000 limit on a handful of credit cards. If you have, let's say if you have a $500 balance, you're going to be at 5%, right?
Okay.
5% credit utilization. You want to keep that. What most credit advisors would say is you want to keep that under 30. I say you want to keep that under 10. I've seen studies that Credit Karma put out a study nationwide of all of their users that had a credit score of 800 or higher, and they had a credit utilization of 7%. So you want to keep that very low.
So let me repeat this just so I understand it for me, okay? So let's say that I add up all the limits on my credit cards, and give me some other examples that I could be, the limits I have.
Yeah, so these are all revolving. Revolving means, you think of it like a revolving door in a department store where you can take out the money, right, and then you pay it back, and you can take it out, you pay it back, and so it's just give and go. Whereas like an installment loan would be like a mortgage or an auto loan. You pay the same amount every month. Your balance decreases. You get charged an interest. So that's more fixed. But revolving would be, like you said, credit card, a store card, a gas card. The other one would be like if you go finance a bed or some furniture or something like that. you might think, oh, they're giving me 0% interest, and they said I could just pay, $150 a month for 5 years, and it's going to get paid off. It feels like a kind of this fixed thing, but it's just a line of credit that they're giving you. So that's going to be part of your revolving credit as well.
Okay, so let's say I take all of my revolving credit, like you said, the examples were credit cards are probably the most common form of revolving credit.
Absolutely.
And so we take those, and let's say I look at my limits on all of them, and it adds up to $20,000. Okay.
Yeah.
So I agree with you. I'm on the same page. I've heard the same thing over and over again. If you want to really have a good credit score, I know myself, my wife and I, we always keep our credit utilization below 10%, which means if we make let's say we only have a $20,000 limit and we make a big purchase, we're paying that off that week. So it doesn't stay on there for the entire month, where now it shows that we have, let's say we spent $3,000. And now we just went above that 10% threshold, right? 3,000 of 20,000. And so is that correct, or am I doing that wrong?
Yeah, that's absolutely right. So if you have a $20,000 limit, when you put it all together, you want to try to stay under $2,000. Now that doesn't mean that you can't go make a $3,000 purchase. You get your points, you get your rewards, whatever you want to, if you're playing that game, right? And I'm sure you talk about that. But what you want to do is you have an end date on your statement, and it's at that end date that the credit card company is going to report to the credit bureaus. Now this is kind of a lesser known strategy, and you kind of hinted on it, and I'm really, really happy that it sounds like you already know this strategy. Is you want to go in there and you want to pay that down to 10% or less prior to your end statement date. That's different than prior to paying on your due date, because so let's say right now we are recording this on May 20th. Okay, so let's say you have a credit card and you make a purchase today for $3,000, and we're in a 30-day cycle that ends on June 18th. Okay, so we're in there. Well, that's not going to be our due date. We're not going to owe the $3,000 on June 18th. They're going to give us like 3 weeks grace period to pay that without charging us any interest, right? But they will report it. If on June 18th our balance is still $3,000, they will report that to the credit bureau. So what you want to do is, even before your due date, you want to go in before the end of the cycle or the end of the statement date, and you want to pay it down if you can. And if you're the type that you want to pay it all off, then the thing that I would say, also lesser known trick, is I would pay it down so it shows that you are using your credit card, because use and establishing that good payment history is important. So maybe you pay it down to where it's just a couple $100 left on the balance, right? And then prior to the due date, you can go back in and you can pay off the rest, and then you'll still avoid interest charges.
So let me sum this up then, because I feel like I'm following you, but I have to repeat it so I know I'm understanding it. So there's a statement close date. So I'm just going to make it really simple. Let's say your statement goes from the 1st to the 30th. Okay, a 30-day statement. So you start using your credit card throughout the 1st and the 5th and the 7th and the 15th and throughout the month, and on the 30th it closes. The nice thing is for when you're using the credit card, you get that, what is it? You can, for a month, or whenever the due date is, it's interest free until like the payment due date. Different than the statement close date. So I think the misconception so many people see is, well, if I pay it off and I don't pay any interest, it won't affect my credit score. And you're saying, no, you're paying attention to the wrong date. The date you should be looking at is the statement close date, not the statement due date.
That's exactly right. And for a lot of Americans, it doesn't matter. For a lot of Americans who are just maybe charging $500 or $1,000 and they have big limits, it's not going to matter. But someone like me, I put everything that I can on my credit card. I put our health insurance bill for $1,400 on our credit card, and everything that I can, because I want the points, and I do play that game. So if I just let it go until the payment date, then the credit card company is going to report my giant balance, which we might charge $5,000, $6,000 a month on our card, and stuff like I don't want them reporting that. So what I do is I go in prior to the close date. I pay it down almost to nothing, and then I go in again before the due date, and I pay off the rest.
Okay, so there's some strategy in this, but if you're looking to, okay, so that's what I want to kind of transition into is I meet with so many people that, especially people, and this, I'm not just pigeonholing this group of people, but I do meet with a lot of people in their mid to late 20s. They really, truly want to do everything they can to buy a house. And they are so focused on improving their credit score. And, for making some mistakes, their credit scores, it's in the low 6s, high 5s. And they're like, I don't know what to do to start. I was on your site here, and I'm gonna show your site here in a minute, but I was on your site, and we'll put it in the show notes if you're listening. But your site says boost your credit 50 to 100 points in 90 days. There's an asterisk there with some fast working credit improvement tools. So right away, I look at that and I'm thinking that's what I need to do. That's what I want to show people how to do. So one of the big reasons I wanted to have someone like you come on is, what's some of the low hanging fruit that people could be doing out there to improve their credit score that 50 to 100 points in a relatively short amount of time?
Yeah, well, I'll answer that in a couple different parts. Okay, so there's typically two reasons why someone's going to have a low credit score, and one of them is because their age of credit and how long they've had this payment history. It's just that it hasn't been around for long. So if you're just starting as a 20-year-old, well, you have a clean slate, right? So I should have a great credit score. Well, no, not necessarily, because you haven't proven that you can pay stuff back on time, right? Mm-hmm. So that would be someone who's called either credit invisible or that has a thin credit file. So there's 26 million people that are credit invisible in adults in the United States. That means that they've never been able to open up a credit card, or they have no trade line, or they've never been able to open up a credit account, right?
Okay.
And so if they went and tried to check their credit on, let's say, Credit Karma or at myfico.com, they would get a no hit. There's nothing there on them. Mm-hmm. So that's a credit invisible. And then there's people with thin files, which means they have 5 files or five trade lines or less. And so that's still not too much. And a lot of people in their 20s, up to 30, 35, that's the case for them, is they just don't have much history, or they haven't used much credit. And so what they need to do is to establish their credit. So there's a few tools that they can do to do that. So one of them would be Experian Boost, that I highly recommend. Experian Boost is, you can go sign up for free, and Experian Boost gives you credit for your utilities payments. So let's say that you pay internet, your cell phone, and your water bill, your gas and electric, right? Well, traditionally, you don't get credit for that on your credit report, which kind of stinks. You should, if you're paying those things on time every month, right? But you didn't have to take out a loan to pay those utilities, so they don't report to the credit bureau. So what Experian Boost did is they said, look, if you can prove to us that you've made these payments, we'll go back 2 years in your payment history and we'll give you some sort of credit for that. And so you can get an immediate boost with your credit there. There's a similar kind of sister offering.
Real quick, is there a fee to Experian Boost? Does it cost any money?
No, it's free.
Okay, good to know.
Yeah, disclaimer is they're going to want to link up to your bank account. Mm-hmm. So it won't work if you make your payments via credit card. Okay. It has sort of a sister or cousin product with one of the other big credit bureaus, TransUnion, and that's called eCredible Lift. And that was just like $19 a year. And I like that one a little bit better because it does not link up to your bank account. So what they do is they link up to your utilities account. So who cares if they get access to that, right?
Mm-hmm. Yeah. So okay, so I'll make sure, if you're listening, that we have links to the show notes for eCredible Lift, for Experian Boost, anything that we talk about. If you're listening,
the other the other one that, have you ever heard of the authorized user strategy or the piggyback strategy?
I have, but I'm not savvy on it to explain it. So
Yeah. Okay.
I'd like to go over it.
Yeah. Okay. So, and at Credit Knox, we call it the borrow a kidney strategy, because basically what you're doing is, let's say, Chris, that you are, 22 again, and let's say that you've never had a credit card. So you're a credit invisible, or you have a thin file, right? And and let's say that your mother has a Southwest credit card that is 15 years old, which she's been paying on time for many years, and maybe it has a $10,000 limit on it. What you can do is you can go say, "Hey, Mom, can you add me as a user onto your credit card?" And it's called you'd be an authorized user. Okay. So what would happen by doing that is you would actually get a credit card potentially sent out to you. Now, she could have it sent to her own address if she just wants to do it to give you a credit boost, but she doesn't have to let you use this card. But what happens is you will inherit that credit card payments history on your credit report.
The new person, not the person that's
the person with no credit history.
Okay.
Inherits that credit history as if it were your own.
Gotcha.
Right? And so that's the way to take someone who's brand new to credit and establishing their credit, or they have a thin file, and add to add substantially. So you can go from 0 to like 700. It's crazy.
You brought up a really good point. So when my wife and I got married and we bought a house, this was late 2000s. I remember we went to go get a loan, and so we were doing it together where our names are both going to be on the house. And I remember the lender, kind of laughing, saying, "Thank goodness your wife's here," because I didn't really have any credit history, and she had this really good credit score. And so she has an American Express card that says member since 1985. Wow. In 1985, she was 3. And I'm like, how is this even possible? Well, her grandmother, not in 1985, but her grandmother added her to her American Express account when she was probably 18 or 19 years old. So it looks as if she has the same date as her grandmother of 1985, plus, well, at least her card says that. And then in addition to that, it really boosted her credit score. For the longest time, her credit score was way better than mine. I think it still is. And I think a lot of it has to do with that length of credit. She'll always have more than me. Yeah.
Now, I did it myself with my own mom. When I started Credit Knox and I started learning a lot more about credit, I'd never heard of this strategy. And here I've been in the financial industry for like 15 years. I got my Series 65. I know all about stocks and bonds and mutual funds, and I know all about life insurance from my previous business, but I never heard about this strategy in credit until I really got deep into it. So I tried it, and I already had a credit score over 700. So it's kind of harder to budge your score when you already have a good score. But
let's say you're sitting at 580 or something like that.
Yeah, I mean, it's gonna be a bigger help for you if you have a worse score. But I would say if you have 20 collections on your report, and then you get this one positive on your report, it might not help that much. So it's not just it's not like a magic pill. It sounds like related to your score. Like, if you have a 400, then you're gonna get boosted by 200. If you have a very thin file, then you could get an enormous boost from something like this. And I'm really glad that you gave the example of your wife, because that's what it was. It was really intended for kind of the traditional family, let's say 30 years ago, right? Where a husband and wife in the traditional family, where maybe the husband was the breadwinner and the wife would stay home and take care of that house. I mean, obviously it's not like that these days, but if they got a divorce, that woman would really struggle to go out and get credit if she needed it, if she wasn't on any of the accounts.
Got it.
Right. So if he's the breadwinner and he manages finances and she's not on anything, she's in trouble. So they changed it to where a spouse could be added to someone else's credit line like that, and this is all on the up and up. right?
Mm-hmm.
Where you can go to FICO, to any of the credit bureaus. You can go to wellsfargo.com. All of them have instructionals telling you about the authorized user strategy.
So let me ask you this, and I've heard of this, and maybe it's not even something I should be talking about, but it's kind of this underground side hustle that I've heard about, and I'm like, I'll have to ask Chris. So
Yeah.
I've heard about these companies that are pairing people with good credit with people who are trying to build their credit, and so basically what they could do is I could say, okay, I, Chris, am going to add some guy in another state that I've never met before onto my credit card. I'm going to send the card to my house if he never gets a copy of it. And then he pays me a monthly fee and it builds his credit. Have you heard of this? Because
Sure. So this is again allowable. So you can purchase trade lines. So not all of us, like the example that I gave of you, Chris, being able to just add yourself as a user to your mom's perfect credit card. I mean, not all of us has a mom with a perfect credit card, right? To
sure.
do that. And if you don't, then if you don't have a friend or family member who either has a card or is willing to add you as a user, then you can buy your way onto a credit card. So one of my favorite companies are here in San Diego, where I am, is Tradeline Supply Company. And
what's it called?
And they do that. Tradeline Supply Company.
All right, I'm gonna put that in the show notes as well for you guys to.
So again, it's not really, and technically, they wouldn't want to be known as a trick to boost your credit, but it's just a way to buy a trade line, and then kind of an indirect result of that is if you can add to your credit history and especially if it's positive credit history. I mean, I should say, especially if it's positive credit history, right? You don't want to get on someone's credit card if they miss all these payments. So be careful doing this with a friend or family member. You can't just add yourself on any credit card, right?
Mm-hmm.
You want to get onto a good credit card, good payment history, a nice age card would be better, 5-10 years old or older. And then if you buy one, these things can cost like a few $100, $500, but it can be a pretty good shortcut to helping you out.
On the other side of that, if you do have good credit, is this like a passive income stream side hustle that people are taking advantage of, or no?
Yeah, you can be on that side as well. I mean, I've never seriously looked into it. I don't personally like the idea of someone being on, a stranger being on my credit card, a user. But yeah, and I know Tradeline Supply does that too. So if you have awesome credit and you want to make it, few $100, I think you can make like a few $100 for adding someone to your card for like 3 or 6 months. So it's pretty good passive income.
Not pretty good. I'll say not for me. I would not do it. Wouldn't be comfortable doing it.
You have to call the credit card company. It's like a 5-minute call, so it's not, you don't have to do much to make that money.
Okay, awesome. All right, so some of the other questions here, we're kind of getting towards the end here. So some of the other questions I have is, what are some of the biggest misconceptions, misunderstandings that you hear from people doing what you're doing at Credit Knox that are just plain wrong? They got bad information. What are some of those misconceptions out there? Because I feel like I hear them all the time, but maybe what I'm hearing isn't a misconception. Maybe it's a new known. I'm just not privy to it.
Yeah. Okay. So I think what's happening in the market is there's kind of the same old advice out there is, you need to pay on time every time. And we already talked about that. You don't just need to pay on time. If you want to get your credit utilization down, you want to pay early. It's also a misconception that you have to pay someone to repair your credit. I mean, credit. There are professional credit repair companies, and we even did a study about them on Credit Knox that says or indicates that they do a pretty good job to help people increase their credit score, but it's only for someone who has damaged credit. So a few minutes ago we talked about people that need to establish their credit, and that's why they have a low score. On the other end of the spectrum, you have people that have a bad score because they've made some mistakes and they have negatives in their credit score, right? So what they want to do is clean up their credit history, and they can go to a credit repair company. But you don't necessarily have to, pay a professional to do that. You can get your own credit report at annualcreditreport.com, and you can look for what, the negatives in your in your credit files. You can pull a free report from all 3 credit bureaus, right? And you can look for the 30-day lates, the 60-day lates, the collections, and you can send a letter to the credit bureaus, and you can say, hey, can you verify this debt? Like half the time they won't even verify it, and then by law they have to drop it from your credit report, which is kind of funny. So that's what the credit report. That's what the credit repair companies mostly do, is they send out letters disputing your accounts. But you can do that on your own.
So, Chris, you made a good point there. And I wasn't doing this. So I've always been taught, and we talk about this a lot in the past in the podcast, is I recommend, and maybe I'm wrong on this, but this is what I've always done, is I have a Google Calendar alert that pops up every 4 months, and it says, Chris, get your Experian credit report. Then 4 months later, Chris, get your TransUnion, and then get your, what's the third one? TransUnion, Experian, and Equifax. Yeah. So I get those 3. I get them every 4 months because you can only get it once a year. At least that's what it used to be like.
That's what it's been like for the last, so that was mandated in 2003 under the Fair Credit Reporting Act. And that's great because we have access to our credit reports. You can, it's not just about the negatives in a report that belong to you. It's also about stuff that doesn't belong to you. Mm-hmm. So let's say another Chris Peach had some negative on the report, and accidentally it got attached to your credit report. And you don't want that on there. And you need, and the only way that anyone's going to find that is if you yourself go in there and find it.
Yeah. Right? So on one of my credit reports,
there's fraud going on. So that the first example is just an innocent mistake, but someone takes out credit in your name and it's and a crime's being committed, then that's also going to show up in your report. So you want to go in there not just to dispute the negative items and kind of clean up your report, try to get your credit up, but also to it's just good prevention and defense on your credit. Make sure that there's no errors in there.
Chris, so this you just reminded me. I remember looking at a credit report a few years ago, and I looked and it said Dillard Gems card. It was a Dillard Gems card. We don't shop at Dillard's. We don't even have a Dillard's near our house. And I'm like, this is weird. It was like a $2,100 balance that wasn't getting paid. And so every single, there's a number on the credit report or like a letter that you can send. I can't remember if I called somebody or if I think I submitted something online. And within like a month, it was gone. And no one ever contacted me. No one ever said anything. And I thought to myself, if I didn't go and look at my credit report, that would have stayed there forever. Yeah. And all it was an email, I think. It was really simple. And it went away. I didn't have to hire anybody. It just went away.
Yeah. And a lot of times those, they're negative items that are on there that can really, that one, maybe that wasn't that bad, a couple $1,000, but you can have items on there that are really affecting your credit score, because this is how your credit score is being calculated, is based on sort of the ingredients of your credit report. So all those items mix up and they get calculated into your score.
Got it.
Yeah. So that's why checking your report's really important. And what I was saying is that's the way it was the last 17 years, is you could only check once per year. And if you wanted it more than that, then you had to pay the credit bureaus for your report. But now you can get it for free weekly this is part of the coronavirus kind of relief that, the financial crime has really been up as people have been borrowing more the last few months. Okay. So what they did is they said, we're going to make it free weekly now until April.
Really?
Yeah, April 2021. There's probably no reason on earth that you would need to check your credit report every week. It's like this giant thing. But yeah, every few months, I think, is a great idea. And
so for me, that makes me feel comfortable, because now I know I can pull all 3 and not have to wait, 4 months or whatever to pull another one. So that's new news to me. I'm glad you said that.
Yeah. And then I'll say the annualcreditreport.com is the address. I remember the first time hearing that address, I thought, oh, it sounds kind of like freecreditreport.com or these others. But no, it's actually, this is the legit website for Experian for the credit bureaus. That this is where you go to get it.
Okay. So, and I'll have that in the show notes. It's annualcreditreport.com. Again, that's annualcreditreport.com. Chris, we're wrapping up here. I just want to say thanks so much for coming on. I learned I even learned some stuff that I didn't know about. You
Good.
definitely opened my eyes to the due date versus payoff date. I wasn't aware of that at all. And then what you just said with the annual credit report going to a weekly basis, and some of these other low-hanging fruit that we talked about, improving your credit score. But we could talk about this for 2 hours. If somebody who's listening or watching it right now wants to find out more information, where can they find information for your site, what you're talking about, improvements on credit scores? Where's that all located?
Yeah, okay. So since we talked mostly about the what we call the borrow a kidney strategy, where you borrow a friend or a family member's kidney to help boost your own credit, I would go to creditnox.com/borrow a kidney. And
is it all one word?
Step by step, how to get somebody, how to become a user on their credit card. It tells you if you don't have somebody in your family or friend that would do this for you. It gives you the alternative and where you can go to buy a trade line.
Okay, perfect. And if you're watching on this on one of our live streams, you're seeing it. If you're listening to the podcast, again, we're going to have links to all the show notes and everything else that we talked about. Chris, my friend, it was real, man. I appreciate you coming on and just opening my eyes and the listeners and the viewers' eyes to the truth when it comes to credit scores, not the misconceptions, how to boost your credit score. And it sounds like if you're out there and you're looking to boost your credit score, I think the first thing you need to know is what is going on with your credit report. So if you haven't already, head on over to annualcreditreport.com, pull your credit report. As Chris said, because of coronavirus, you can now do that once a week. It used to be once a year. Check that out, go through there. And again, I like what Chris said. You don't have to hire somebody to make these calls for you or write the letters. The information is on your credit report. It'll tell you exactly who to contact, what to do, and go from there. So Chris, appreciate you coming on, man. This was a great episode. And I know it's going to help people. So thanks so much for coming on.
You're welcome. Yeah, I'm happy to do it. Thanks for having me.
All righty, guys. That is the interview with Chris Huntley today. I hope you guys enjoyed this show. And like I said, you can go over to creditnox.com. That's where you can find out everything you need to know when it comes to credit scores, how to repair your credit. There's some blogs on there, some information on it, everything there is to know about the credit, including even more stuff than we talked about today. And so kind of wrapping up this episode, want to take you back to before you build a credit score, you need to get on a written plan for your money. So if you're looking to get on a plan where every dollar in your life is accounted for, where you can start paying off debt, you can start building wealth, you can start saving money, all of these things happen when you have a financial plan. And we just finished up a 5-week live coaching program where I met with about 40 people on a Zoom call. We met twice a week for 5 weeks. We talked about how to create a budget. We actually created a budget together. I look at every single person's budget. Then we look at how to save money, how to pay off debt, and how to move forward in the right direction with your money. If this sounds like something that you'd be interested in, head on over to moneypeach.com/apply. That's moneypeach.com/apply. We're taking applications for the June class that's going to start the first week of June. And I want to make sure I'm a good fit for you. So head on over there, moneypeach.com/apply. I'll be going through those myself, and I will be getting back to you, and we'll go from there. So thanks, guys, so much for being here, and we'll see you next week, same time, same place, for the Money Peach podcast. Take care.